Green. Uh, just to know what you're hearing my sound correctly. Do you hear the background noise from this playlist? Just write a one in the chat. All right. 0. Everything working fine. Great. Got it. Guess you're not hearing the sound. No music. Got it. Thank you. All right. New York session. Let's jump into it. So what am I looking at today? We have no news today, right? So we set everything up. So we have the Nasdaq right here. What did the market do London session? Yeah, see? No setup on the DAX. Yeah. So you can see it in DAX. There wasn't any setup present. Wasn't any clear bias. Let's continue to the upside. Now we are on the can't see the charts. But all right, thank you. So marking out London Open. The market's about to open in 10 minutes and marking out pre-London session open right here. Right, I'm looking at the break of structure to the upside. The market might continue bullish right here on the DAX. Looking out the overnight range. And this sell side liquidity might be taken out. So 1 hour liquidity. Mm, yeah. Yeah, looking at this, it looks like sw reacted on the fair value gap on the 1 hour, continued to the downside, took out this liquidity, might continue to the upside, take out this fair value gap, and then continue to the downside. But it's not certain why, because I'm not having any 1 hour break of structures in the pre-market session. So it might fair value gap reaction, continue to the downside. After this candle closes on the 1 hour, which is in 36 minutes, might continue to the upside, respect this area, and then continue. But it's still uncertain because we just swept this sell side liquidity. So this is what I'm doing. I'm pointing out or I'm marking the 4 o'clock, which is 10 o'clock, I assume, for you who are based in the US. So the 4 o'clock or the 10 o'clock closes the 1 hour candle, and this indicates where the market is going. Also, because of it might create a breakout structure to the downside. So I'm marking out the high and the low of the overnight range, and this might just continue to the downside. Also marking out this 15-minute liquidity to see what the market is doing. Would you look at the Nasdaq also? Yeah, of course. I'm at the NQ is the Nasdaq, and the DAX is uh, is the DAX basically. So US Tech is the Nasdaq, and the Germany 40 is the DAX. Anytime. If you can't find the DAX on your broker, try using either DE40, search for that, or the Germany 40, or the Germany 30, something like that, inside of the broker. All right, got it. Yeah, bunch of names, right? Right, the market's about to open in about a minute. Right, we broke out of the overnight range right now. We're waiting for it to close. Still a lot of time until that happens. So these markets right now, the DAX and the Nasdaq are contradict contradicting each other. They usually follow along the same pattern, the same trend, the same bias. They're very close to it, but you can see today is either it sweeps liquidity, it continues to the upside. Let's see on the low. I'm moving this to make the chart more clean. Okay, so this is what I'm thinking right now. If this is a 50-minute candle close, the body of the candle closes underneath the overnight range, the London session, and I'm ready to take a trade, all depending on the size of the candle because it can continue to the upside. And the high probability of it continuing to the upside is through sweeping some liquidity. So this area right here has already been swept by this candle right here. And this area has not been swept yet. There's still some liquidity resting right here. There's still liquidities resting right here, down here. There is a fair value gap that's not been taken out right here. So we can continue to the downside. So I'm waiting for it to close the candle before we can do anything. Now, if it takes out the 1 hour liquidity before the 15-minute candle closes, then we need to reassess and readjust. Why you choose DAX and NQ pair to trade on it? Because it works best on the DAX and NQ based on the back testing that I've done and what works best. It also works on the FTSE, by the way. FTSE. This is the FTSE is the UK 100. Also works good on the FTSE, but we don't trade it. It's too many symbols. This is the reason why we wait for the 15-minute candle. Some entered before the 15-minute candle closed, but we are waiting for the 15-minute candle to close underneath this area because the 5-minute candle looks very promising. It closed underneath the overnight range for it to continue to the downside, but there is still liquidity lying up here. If the market wants to continue to the downside, there is a probability that the market wants to come up, take out this liquidity, and continue to the downside. That is why if we should take this trade, we would have put our stop loss over this area right there. All right. In about 3 minutes, if this candle closes under the overnight range, this is a trade I will be taking. If it doesn't, then it doesn't, and we don't take it, or I don't take it. I don't really like this trade, to be honest. Why? Because the risk reward is less. The reward is less than the risk. So we'll see. No worries. I'm not liking this trade. Why? The main reason is it's a 65 pip, about 60, let's say 60 pip point stop loss area. If it's underneath the overnight range, which brings it to where's the high probability of it continuing reversion is from the liquidity area, which is 0.74, 0.70. So the risk to reward is less. The reward is less than the risk. Why risk 1 to gain zero point 0.7 back? Yeah, see what's happening right now. Okay, it's getting tight. This wasn't a good move, unfortunately. No trade taken. All right, I'm focused more on the DAX right now. 50-minute closed. Look at that. Look at how it's right. It just swept liquidity on the 15-minute on the DAX price. So if we jump to the 1-minute, Just swept 1 hour liquidity. Let's see. This is what I'm thinking right now. There is a low right here. I'm gonna mark it out for it. Okay, I get it. I'm gonna mark it out red. Why? Because the 1 hour candle is about to close in about 10 minutes, right? So it can make a break of structure to the downside here in this area. The body of the candle closes underneath the candle. Yeah, see, there is a school run on the Nasdaq. Fortunately, stop loss area was not good. Not that stop loss area was not good. Let me reassess, but don't let me forget about this trade. So what we could have done, this is obviously hindsight, is to take the trade, right, on the body, on the close of the 15-minute candle, put our stop loss right here. We get a 50-point stop loss area. Now our first take profit is right here. We think that the risk to reward is small, is 0.8%, right? Is it worth it? That's a good question to ask oneself. Is it worth the risk that I'm putting in on the table? Some people say, you know what, if I'm risking $1,000, I get 800 back. That's fine for me. All right. But that's not good in the long term, in the long run, because if you lose, because we are implying that we are going to win the trade, that's not certain. Because if we lose, we've lost a 1% trade to risk to gain 0.8%. It's not worth it. Now, the thing you also can do is when it comes to this area, you can just move your stop loss to break even and hope for the best. But we don't trade that way. Hope for the best and wish that it reaches this fair value gap area and it gives you a 1 to, I don't know how much, 1 to 2.3. That's not a good risk reward trade. It's not. All right, looking at the DAX right now, liquidity has been swept. Focus on the DAX. Liquidity been swept. 1 hour candle is about to close in 6 minutes. Liquidity swept. Looking for a break of structure to the upside. And break of structure. We're just waiting for the last confluence right here. Yeah, this is definitely going up. Or reacting. So I'm waiting for it to continue to the downside, react from this fair value gap and continue to the upside. There's a 5-minute fair value gap right here. So this should give us a reaction to the downside. Okay. Nasdaq continuing to the upside also. Now focus on the DAX. So there is another fair value gap created right there. So it either gives us a reaction on this fair value gap or this fair value gap. You can see that this yellow line here indicates that the 4-hour or the 1-hour candle will close at 4 o'clock. And also the 4-hour candle. Oh no, sorry about that. Not the 4-hour candle. No, not the 4-hour candle. The 1-hour candle. If it continues to the upside directly without giving us a fair value gap reaction, that's unfortunate. That's too bad. But we still have when the 1 hour closes that it might continue to the downside. So I'm gonna remove this fair value gap GAN box and remove this fair value gap GAN box. Marking out equilibrium. Right. When our candle closes, and we are looking for a reaction to the downside right now. Yeah. Would I take the trade from this area right here? No. Why? Because the fair value gap or the reaction is way too high, and there's a 5-minute fair value gap right here that can reverse it to the downside. Looking for good setups, not halfway. Nasdaq reversed. That's a good thing. That's a good thing that the Nasdaq continued to the upside. Why? Because you can see the indication of these both, the DAX and the Nasdaq. Let me go to the DAX before I missed anything here. So it's reacting to the downside. I'm putting a line here to see that it crosses this area, because after this area, it's the fair value gap area right there. So I have my stop loss preset to this area right here on my broker, so you get a perspective on where I'm putting my stop loss. It has to give me a reaction to the fair value gap before we enter. Yeah, come on, putting it actually. All right, I'm waiting for it to give me a reaction. I'm looking at the time right now, 14 seconds, 13 seconds. See, this is getting tight. Still waiting. Why? I'm waiting for the reaction on this candle, the second one, because this might continue down and close underneath the fair value gap. This can be a good setup though, if it reacts to the upside, because the stop loss area is good. So I have my two fingers on the trigger because I'm waiting for the seconds to go down. 10 seconds left. Yeah. This is where I would have taken an no trade, no long. This is where would have taken an espresso, right? Taking a trade right there. Maybe something right there. There's a high risky trade. Why? Because it invalidated the fair value gap. This is gonna shoot down. Yeah. So this is what happens. Before I remember this happening to me a lot. Um, by the way, we are just waiting. I'm just waiting now for it to give me another reaction to the upside. Maybe it takes out this fair value gap right here, or liquidity, sorry. This 15-minute liquidity right here. That's my second plan. Or these liquidity areas right there for me to continue looking for longs. I'm still bullish. Um, so before there's a break of structure right here, right? And we are waiting for the fair value gap reaction. Nothing is happening, nothing is happening, nothing is happening until this area. And this is what I usually take trades, right? Take a trade right here, put my stop loss underneath this low or something like that. And as soon as I enter, it reverses to my stop loss area. So that's why we don't need to rush it. We don't need to stress about taking the entry. And you can see that this area didn't get respected. This candle closed underneath this area, and this area, the fair value gap area, this candle closed at the perfect place, but the candle next to it didn't give it a reaction to the upside. So it broke um, it invalidated the fair value gap. And Nasdaq is continuing to the upside. This is probably going to continue to the upside right now. To the downside, sorry. NQT took Fair Valley Gap, took out the Fair Valley Gap, and it gave it a reaction. But still, let me just checklist. Trend defined before open. This is the main one. If we're using it as a triangle, this is the base of it, which is the trend. Even though it took out and created Fair Valley gaps and reaction off of them, the trend is not really defined right here. You can see that the DAX is continuing to the downside to take out some more liquidity. This might be something here. Fair value gap. Mm, not liking this setup. Why? Liquidity sweep is way too far away. Two, these breakup structures are not very clear. Three, it didn't close over the body of the candle, so it's not a valid liquidity sweep. And this is a fair value gap right here that it re-respected to the downside. I'm doing the, I heard Tim Ferriss talking about this, the red team, blue team. When he creates a project, he he has a team that is trying to destroy the project to see where the errors in the project are, if they create a product or something, right? So I'm doing the same thing here. I'm thinking about where, why is this a bad trade? Where is all the flaws in this trade? So I'm trying to red team, blue team myself into thinking like can this go wrong? Why is this not a good trade? Checking the news. There are news tomorrow. Spanish unemployment. You can filter these, by the way, in the Forex Factory. Just the filter. Here you go. There are red folders, orange, and medium, and yellow. So the yeah, the red folders are the high impact news days, and the medium is medium impact news days, and the yellow one is low impact news days. So you can basically just apply filter on these and see which news really affects the market. So US President Trump speaks again today. Am I taking a trade? No. You can see that the market is continuing to the downside. So this is a fair value gap area. This is what the market is coming in. Now I'm seeing it, right? Not I'm not taking a trade off of it. Why? Because if I go back and think, where was the liquidity sweep? The liquidity sweep happened at this area right here, which is 42 minutes ago. Is it still valid to take the trade from the 42-minute liquidity sweeps that happened 42 minutes ago? No, not really. But it can still react, continue to the upside, take out some liquidity areas right here. See, Nasdaq is continuing to the downside. Um, yeah, there was a fair value gap right here, but reacted to the upside, but still not a strong enough move. So if I go to the 15-minute, looking at the DAX, there are higher highs or lower highs and lower lows created. Highs, lower lows, lower highs, lower lows. And this is what the market did when it swept this liquidity. It created another lower high, but not enough to continue the trend to the upside. And because this is equilibrium, right? I go to the 1 hour, marking out the high and the low of the entire move, and I mark out the equilibrium. This is the premium level um, not premium. This is the discount level, and this is the premium level. So what does the market want to do? High probability of the market wanted to continue to the upside to the premium level from a discount. Mm, this doesn't look good. I'm gonna take a 5-minute break. I'll be back. All right, I am back. Right, I'm waiting for this 15-minute candle to 15-minute liquidity to be swept. Barely touching it. Almost there. There we go. So it just swept 15-minute liquidity. Now we do the process all over again. Sweep liquidity sweep. Right, I'm waiting for a break of structure, fair value gap, reaction to the upside. You can see that the Nasdaq is continuing to the upside. I'm waiting for it to break structure. Let's see what the Nasdaq did. This might create a lower high and then continue to the downside. Yeah. If it gives me a reaction to the upside on the fair value gap right here, that's a good thing. So there's a fair value gap right here. It reacted off of it. If it closes over this wick right here, that means that we got a break of structure. I'm waiting for it. Planning my stop loss to be around this area right here. So the body of this candle closes over this wick. Then we've got a breakup structure, but it's far away from it. So we're waiting for the next candle to happen. New high created right here. I wouldn't want to be stuck in this trade. Like taking a trade like this on the reaction of the fair value gap, putting my stop loss down here, like being stuck in these trades are horrible. Like for 41 minutes in consolidation. No. Yeah, it's not giving us anything on the DAX. All right. Yeah. All right. It's not giving me anything, the market. That's a good thing. That's a good thing that we didn't take a trade. because our my hope was to take the trade from this. This was a good setup. Let's recap a bit. This was a 1 hour. This was a 1 hour liquidity sweep right here, right? And it created a break of structure right here on this area. So we waited because we have the trend defined, we have the liquidity sweep on the one defined, which is strong on the 1 hour. We have a 1 minute break of structure, which is very clear and it's a good break of structure. Wick, body of the candle closed over it. Now, it didn't give us a fair value gap reaction. Why? Because the body of these candles didn't close under or inside of the fair value gap. Now this body did. This is a valid fair value gap, but the because we are bullish, this candle right here needs to be bullish. Not always, but most of the time, like in this scenario right here. So I waited for this to give me a better confirmation that we're going to the upside, but it didn't. So we didn't take the trade. So we didn't film. I didn't FOMO inside of a trade and thought, oh, I missed this trade because if these FOMO emotions were to appear, it would be right here, right? And if I would take in this trade, where would my take profits be? On the highs, on these highs. And I rather not take a trade than have a trade be close to my take profits with a bad entry and then take me out, right? So we waited for another 15-minute liquidity sweep that happened right there. There's a 15-minute low, and there is a 15-minute liquidity sweep right there. It swept liquidity right here, right? It gave us a fair value gap reaction right here, which is beautiful. Fair value gap, wick into it, and then continue to the upside, but it didn't give us a clear break of structure. That is why that is why we have confluences to give us a direction to where the market is going, right? All right, that is it for today. Uh, Market are very choppy today. Thankful to be seen how you look at the market. A lot of patience is required. There's always tomorrow. There's always tomorrow, of course. All right, guys, that's about it for this session. Right. Talk to you tomorrow on London session if you can make it. All right. Take care and see you tomorrow. Bye.